Welcome, everyone. Thank you very much for joining us for today's Global Growth Investing webinar. My name is Audrey Melville, and I'm the marketing director here at Gabelli Funds. And I'm thrilled to be here today with my colleagues Howard Ward, Caesar Bryan, and John Belton, who will help us discuss the complex global growth investing landscape.
I'm going to ask John to give you an overview of what exactly that index is all about.
To start, this is a bottoms-up strategy. We're looking for the best companies, regardless of countries or sectors or anything like that. So our benchmark is the MSCI All Country World Index. This is market cap weighted index, a little over 2,800 constituents spread across 47 countries, 23 developed market countries, and 24 emerging market countries. Now, if we look at the index weights by country, it's about 90% in developed markets and 10% in emerging markets. And more specifically, it's about 64% of the index is US companies. Close to 16% is Western Europe. So collectively, 80% of the index is in US and Western Europe. And then the remainder, there's about a 5% weighting in Japan, just under 3% in China. 68% of our portfolio is in US domiciled companies. But when we look at the business mix among those companies, it's less than half of the revenues are coming from the US. So this really is a global portfolio. And so when we think about the investment themes that our companies are benefiting from, I'd say generally they are global themes. Some of our favorites right now, semiconductors. Second theme that we really like, digital media. Third, global consumer brands. A lot of the strongest media companies today have become so strong because they've gone global. So you have companies like Google and Meta on the internet media side. And then on the entertainment side, Netflix and Spotify, two companies who really unlocked a huge growth potential when they expanded internationally. When Netflix expanded from the US globally, and when Spotify expanded from Western Europe, it's a Swedish company, when they expanded globally from there. And the global expansion from those companies, it's really unlocked a whole lot of growth and a whole lot of profitability.
If you could actually distill this entire process down to one metric to help guide us in our investing, it would be organic revenue growth. That is the key variable for deciding the kind of multiple that your underlying company is trading at. And then the earnings growth, of course, will help to power that share price over time. This is a long-term approach to investing. We like to own companies where we can benefit from the teen level compounding of earnings over a period of time.
And we're looking for companies with sustainable revenue growth, generally a high single digit, as Howard said, or double digit, along with double-digit rates of earnings growth. And obviously, we invest for the long term, benefiting from the compounding effect of earnings. And for a growth strategy, turnover is lower than average, I would suggest. So, we invest in companies that have a powerful and sustainable competitive advantage, high and growing market shares, and that serve expanding end markets that John highlighted a minute ago. Our companies have high returns on capital and equity, and of course, strong balance sheets.
Oh, thank you guys so much for joining me today. This was a great discussion.
Thank you.
Thank you, Audrey.